Let's talk money.
Hello and welcome to yet another brand new edition of Let's Talk Money with me, Surabhi Upadhyay. The countdown is on and I know that you know what I'm talking about. The budget is just days away now and there's been enough chatter, enough clamor about perhaps some help that the finance minister may want to extend to the Aam Aadmi or the Aam Aurat, as they say, in the form of maybe some sort of tax relief in terms of personal income tax rates, in terms of how our investments are getting taxed. Now, whether that happens or not, the idea in the show today is to prep you up for all the facts, the realities as they stand, and also help you navigate what has become a very, very volatile environment as far as the markets are concerned and as far as your own investments are concerned. So to help me do that today, we have with us on the show Rahul Jain, President and Head of Nuvama Wealth, as well as Rakesh Nangia, Chairman of Nangia Anderson. Gentlemen, thank you so much for joining us here in person in the studios. It's been an important week. It's been a difficult start to the year actually for investors and in the markets alike. So before we talk about the bare basics of Budget 2025, just some opening thoughts in terms of the wealth environment and the challenges that 2025 has gotten off with. Rahul, your first thoughts?
Yeah, I agree. I think January 25 has been the very volatile start, and one of the things is that volatility will remain to continue for at least for next 2-3 quarters. So I think investors should be ready. And there are a lot of events also coming, like budget is there. There are expectations from markets on budget side. And there are also events like RBI policy, etc. also coming in days' time. So that will have an impact on market. So I would say that investors should continue doing basic philosophy on the wealth side, doing basic asset allocation really well. Be patient. I think it's a good time to review your portfolios, take the laggards out. And obviously it's a common saying that bad market is the best time to invest in markets. so there's an opportunity.
True. You have to keep the faith.
Yeah, use it.
Basically.
Use
but
it.
Let me ask you this. Usually we always say that budgets come and budgets go. They don't really matter in the long term. They don't matter for the market. It's a one-day phenomenon and the market moves on. Is it different this time because of the environment?
So I would say yes, it'll be a little different for sure, because there are a lot of expectations and the expectations are getting built up because of the environment which is there. So markets or as an investor, we're expecting that budget should be a pragmatic one which should give some spurt to the growth and also be physically prudent in that sense. Another thing which is very commonly spoken is about the capital expenditure.
Yeah.
And we feel there'll be increase, but also there needs to be some execution on the expenditure itself. If there's a clear outlining of the same, I think that will get market excited about. And there is a lot of conversation on slowing down of consumption.
Yeah.
I think the middle class pain, which we keep speaking about. I think if there is some sort of rebate on income taxes, etc., they have extra money to spend on. I think these are things which markets are looking out for.
It's such a different environment that I'm now hearing someone who manages money, wealth, and who's very closely linked to the stock market saying that if there are some rebates, if there are some tax cuts for the common man, it'll actually be good. Usually these things are frowned upon by anyone relating to the stock market, but that is the new normal that we seem to be in. Mr. Nangia, so opening thoughts with you, given the high expectations this time.
I think we as a country or as a world actually going through a really tough time. It is a little unprecedented. And we are calling it, we need a momentous budget. We need an extraordinary budget because this is an extraordinary time.
Okay.
And here all the figures, what we started at the beginning, whether it was inflation, whether it was a tax collection, or the growth, GDP growth, are it going to sustain? Answer looks difficult because we are already on the fourth quarter now. The growth rate is down. It is in 6% now, basically. So it's a challenge with the government. Tax collection, refunds are a challenge. Though tax collection is grown, but it is slowing down actually. And this quarter, I think will be a little bit, if it's a dampener, will have a very serious bearing. The government will have to come out with a lot of things which will not be easy. There will be some compromises, there will be no compromises, which you can't do that. And here will be, you're walking on a tightrope.
The tough balancing act.
And there's a two-thing issue, barriers worldwide. What a scenario change it happened just in few months. The global scenario changed.
Yeah.
So you are going to see this have a bearing on the budget.
No.
See, another thing is that the countries have started looking inward. There's a protectionism coming out. Sure. You remember that we used to say, let's open up the society. Let's make the border clean. Let's make the free movement, free mobility of goods, services, manpower, everything.
That's a thing of the past.
Now we think about ourselves. Yes. I want to tell you one thing. The dynamics have changed in no time.
Absolutely, which is why we have the two of you here to, in whatever be the dynamics, we want to preserve our money and our wealth, and we want to make the best choices for our investments, for our families, right? Which is why we have this conversation on Let's Talk Money this week. So, Mr. Nangia, let's talk taxes, because we know for a fact that through the challenges, the growth in direct taxes has been very, very good, particularly in personal income tax, right? Yes, I think even more than corporate income tax.
Yes.
So, is there a case for some relief? And if you do expect something, where could it come? New regime, old regime, deductions, housing, ATC. Where could maybe the FM be a little gentle?
So before I come back, give me a demographic of the taxpayer in India. 8.9 crore tax returns were filed in 23-24. So now and this comes to close to 6.7%. So if we should talk few years back, 10 years back, 1% people filed the return. Now this year the figure is 7%, around 7%. 8 crores return were filed basically. And you will be surprised, the lowest strata, which is till 5 lakhs basically, 5.25 crores out of 8 crores return were filed, which is 70%, close to 70%, who do not pay any taxes because the income is exempted. They get a rebate under 87A, right? And they don't pay any taxes at all, but they have to file a tax return. But under the law, you have to file a tax return. So now, if you take out this, the number of people paying taxes are just 3 crores. And there's a very big, I've done an analysis, a very interesting analysis. You see that people filing return beyond 5 lakhs, 5 to 10 lakhs, 1.5 crore. Seasonal, good number. Right? If you see it from 10 lakhs to 1 crore, again, there are 1 crore people file the tax return. So there's one analogy which is drawn. The middle people income is either filing a return, declaring a right income, they realize there's no choice, and there's a growth of income. So all these things are bundled together.
Which is why this middle never gets anything. Usually people at the bottom end get something. Maybe people at the top end also. Right, Rahul? Because I remember in the July budget, and we'll just revisit, let's get the tax tables going as well to jog your memory as well. Because what happened in the July budget, July 2024, is that the finance minister did offer some sweeteners in personal income tax, but the sweeteners were for the lower tax slabs, that too in the new regime. In fact, she went on to hike standard deduction. Again, that was in the new regime. Standard deduction went from 50,000 to 75,000 rupees. Again, there was relief, but now relief was for the highest tax slab or the highest earners, because that is where they were given the choice that if the super rich are going to move to the new regime, then the surcharge rate was lower. Their peak tax rate comes down to about 37.5% because of that lower surcharge in the new regime, if they want to be in the new regime. So, Rahul, the rich are getting at least something to hold on to. So are the bottom guys. What about the middle, right?
So that is the expectation this time. That middle will also get some benefit out, and that's what I said also. I think that is one of the expectations which is getting built out.
And like he's saying, the middle has been getting wealthier, so they are really paying a lot more tax. But perhaps they need some help.
I think that is also, that segment is also helping the economy a lot from consumption point of view. I think a lot of growth factors also related to them only. So our part of the investment part of the world also, I think the middle class is the one which is helping the markets be very consistent, sustained after a lot of FIs flow, which are getting outside FI flows, which is negative also. So I think it's an important segment, and something should be done about that.
Maybe they get addressed. So, Ms. Nangia, now tell us the how. If this middle, part is to get some help, people who are, in this bracket. Last time, I think the changes were around in the new regime. The changes were, the slabs were moved to, I think, 7. 6 became 7 and so on and so forth. What kind of changes realistically would you expect?
I can only say lower people will definitely get an exemption. That goes without saying, whether it's a need of the hour, whether it's because of inflation, whether it's global reasons, local reasons, domestic reasons. You expect they will get a relief. That goes without saying. The 5 or 7 lakhs, you will find a little bit of adjusting to the inflation. Rather than tweaking with the rates every year, if you adjust with the inflation, there will be no additional call, or people will not ask for any rebate. So we have represented before the government a number of times to link it to inflation, so that there is slabs, and then round it off basically. Secondly, you mentioned very personal income tax collection has gone up by 300% in last 10 years.
Wow.
And you rightly said it, 60% of the tax of the current year come from personal income tax and 40% come from corporate income tax. So government has targeted it, and I read you the number basically. And surprise, even 5 crores, there used to be hundreds or thousands of people. This year the figure is 58,000.
58,000
file a tax
people.
return above 5 crores.
Okay, so this is an important stat. We should remember this. And I'm going to take this stat from you and I'm going to make a note of it, that 58,000 taxpayers have filed income taxes with income exceeding 5 crores. So that's the super rich in the country.
Again, above 10 crores is 32,000.
Above 10 crores is 32,000.
So now this new segment is coming up, which was unheard.
Yeah.
There was a super rich, no super rich now.
Yeah.
Now super. You know, the income has gone up, the stock market has gone up, everywhere the growth.
I think they call them the mass affluent. I don't know what's the nomenclature. You know, he's managing wealth. He will know what this new rich is being called. But it's a significant segment, right, Rahul?
Yeah,
when you interact with people day in, day out.
Yeah, that's true. That's true. And I think this is also the segment which has been where the trend is significantly changing in terms of the investment behavior. For example, in the past, the core traditional assets of investment were real estate, FD, gold.
Yeah.
Now they're moving to equities in form of mutual fund, AIF, PMS, bonds, etc.
Yeah.
And this segment is also supporting a lot in terms of building this whole stability in the equity markets, which we have been seeing for last 24 months.
Sure.
So it's an important segment. I think the wealth increase is helping the economy in some ways. And I think it's continued to happen because the trend which has got changed, it's a structural change.
Absolutely. And it's a change for the good. I mean, there is wealth created.
I think the days have gone where people invest money now in buying a house residential. It's more of becoming more of a consumption as an asset class rather than investment. I think that change, big shift happening there is leading to a lot of flows into equity markets or related to those similar products.
Sure. Okay, Mr. Nangia, now quick rapid fire because we have to wrap this up and move to the other theme. On personal income tax, what are the key 2 or 3 changes that you would expect? And there's been some talk about allowing married couples to file tax returns jointly. I don't know if that's that's something that'll be taken up seriously.
So what happened, there's a unified structure. People have been talking about it. A family should file one return. It's in US and some part of the world. A company, as a group company combined together, 10, 20 companies should file a tax return. And our personally, we have represented before the government. It's not likely to come. It's too intricate. We are not yet mature to that extent to take that part of that. So this is the only, I can say, a discussion paper for the government to consider it, but not likely to come up. Few other things which I can say, like a lot of exemptions have been withdrawn from old regime, very surprisingly. And which was already there in the old regime, not there in the new regime. I think government needs to see the fine balancing to be done. If I'm moving to the new regime, what am I gain? See what the government has taken away, basically. Not again what the government has taken away. HRA was in old regime.
Correct.
It is not there in the new regime. ATC was in old regime. It is not there. ATD was in old regime. It is not there in regime. House property. When you have a self-residential house, there was an exemption for 2 lakhs rupees. It is not in new regime.
It's not there in the new regime.
So what has happened is, then house let out, house occupied. I want to request the government, why you need to distinguish let out and it's the same. Mera ghar hai, it's my house. But you tax me either way you want to do it. Then I may be working in the service, I may be transferred. 3 months I was occupied, 3 months I was
not occupied.
So I think the government is simplifying it. Honestly, we never thought about it. It came in my mind yesterday. I think let's make it more hygiene. And without I always tell the government, we don't want to compromise on the revenue collection is concerned. We want to make it more efficient, actually.
Sure.
And maybe less cumbersome.
But okay, so coming back to some of the deductions that you outlined, which are not in the new regime, but realistically speaking, if they start offering these deductions in the new regime, it will become the old regime, right? The whole idea was to have a regime with lower tax rates and no deductions. So are you expecting any further sweeteners in the new regime?
I'm expecting it because 72% of the people are filing a return under new regime, 28 still filing under old regime. And government made it last year by default. If you don't opt for it, it will be new regime.
You're automatically in the new regime.
So I am very clear in my mind. Government is very clear. Government is not going to change this thing. Government wants to reduce the deduction. The reason is government doesn't want litigation, doesn't want dispute, doesn't want wrong deductions, exemptions being claimed. And you tend to leave away with the taxes.
Okay, we do have to take a very quick break on this note, but we come back after the break and talk about taxation linked to the stock market and our investments. Are there any changes that we should expect? And then how do we look at our portfolio in a more holistic manner in this volatile market? We'll discuss this after the break.
Let's talk money.
Welcome back. Here with us on the budget special edition of Let's Talk Money. The pre-budget conversation is on because we're trying to understand what budget 2025 could mean for our income as well as for our investment. So the income part is done. Now the investment and the wealth piece. Now, Rahul, again, going back to July, it was quite a historic budget, right? Because at March, spoken about capital gains rationalization. It finally happened, but it happened with a tax increase. 10 became 12.5%, right? So what's the sense? And now in a falling market, I mean, has it been well digested, or I don't even know if there's anyone expecting a cut, probably not a single person on the street. But in general, I mean, what have clients been telling you on capital gains and how they're, seeing that as a part of their investment decision making?
So I would say since 10 became 12.5, it's 250 basis point increment. I think it got digested effectively, and people have taken in the path effectively, because now if someone was expecting to generate 15% post-tax, it become 14.75, 14.5 because of taxation changes, etc. Yeah. So it was not that big in their calculation or their expectation. So that got digested. And I would say that generally investors don't significantly move the needle of their investments in different asset classes just because of taxation. Yeah. Because asset classes inherent have risk and then reward pertaining to it. I think that is the main core point. Sure. But if there is a significant change in taxation, then it is a reason of thinking of changing or changing some asset classes, taking more risk, lower risk. That is then the conversation comes into picture effectively. Yeah. And we keep telling clients also and investors also that tax is secondary. First is to make returns.
Absolutely.
If you will make returns, then only you'll pay tax.
Then you'll pay tax.
I think
which is why I'm asking you this question in today's context, when things are very confusing and it's not a straight line. You'll get 20% from the market every year. Now, I mean, how is that impacting choices? And more importantly, is there any outstanding issue on capital gains which still needs clarity, which still needs maybe, some further sort of tweaks? So
you've asked two things. I think the first thing is that obviously you can't expect a very high rate, IRRs or higher rate expectations in terms of returns at every point of time. Generally, you will have markets where you'll have great returns coming in, and then you'll have markets where it will be very low returns coming in.
Yeah, absolutely.
And we always keep telling our investors that use asset allocation to adjust accordingly. Sure. Like in bull markets, you always become blind to risk. Asset allocation pushes you to reduce your equity exposure, come to the right asset allocation. Similarly, in a bear market, it always gives you an opportunity to go on things which you might be blind to, like right now. Whether you want to invest in equities, everyone is questioning whether we should do it or not.
True.
So that is where I think asset allocation plays a very critical role. Sure. Coming back to a second point, I think there are still small anomalies like a gold ETF versus a gold fund. Okay. Gold ETF gets taxed 12.5. Gold fund still takes 2 years effectively because it's a fund. So I think an investor who invests in gold, whether he does it in ETF or fund, it does not make a change.
So the holding periods are different for the ETF. And
so that is one anomaly which can be corrected. Okay. I think another thing is that in the AIF structure, in the alternative structure, if you look at CAT 3, your taxation happens at the fund level. In CAT 2 and all are passed through. Okay. Me as an equity investor, if I have put an equity strategy in CAT 3, and suppose I want to set off my losses, if I have some long-term equity losses, short-term equity losses, I cannot set off against it. Oh, okay. In CAT 2, you can do it.
But CAT 3, you cannot set off the losses.
Yes, because it's at the fund level. Oh, okay. So I think these are two things, at least what we see is an anomaly which can make some tweaking, clarification can make life easier for the investor and bring a lot of convenience in that sense. Because a CAT 2 and CAT 3, if you're doing equity investment, it should be very similar treated in terms of tax. There is some, I would say in CAT 3, there's an issue on it might not be most tax efficient in that sense.
Got it. Mr. Nangia, investments, both capital gains and, take us through, of course, the changes in equity, how it's mattered. On real estate, if you would expect any kind of changes at all.
So if you see last year, the government did a lot of changes in the capital gain.
Yes.
So first of all, there's a consistent behavior also of the government. You cannot change the law so frequently.
Absolutely.
There has to be a reason about it.
Yeah.
And the reason which was when you tax 12.5% without indexation, they issued a circular. If you want to go to the old regime by paying
They
it,
made
you
that
can
change.
do that.
Yes.
So that is a good way of doing it. Only thing what I can expect is there should be some rationalization in the rate of the whole capital gain scenario. Without not limit to equity, short-term, long-term bonds, every equity, short-term, everything, private equity, anything. So make a rationalization. Make few rates without compromising on the revenue of the government. So if your government is going to collect so many thousand crores in the tax on the stock side, I will make 1 rate, 2 rate or 3 rate.
Okay.
Don't make it umpteen number of rate, which today where the inequity, small players are also there. For them to understand, even though the information comes on the AIs of them, still it is challenged. So this is one part. Maybe government is very bold if they're feeling there's a money required for capital expenditure, which is there. Because last year, the budget had a 10 lakhs, 11.11 crore, which was only 10% to the previous year, this year. Government may be a little constrained, and government is not going to stop. If you see the DNA of a government is to pump money on infrastructure. It's not going to compromise. Will they issue some special bonds?
Okay.
But this is my thought, to need more money, because the government needs money, the state government needs
Those
money.
infrastructure bonds.
Because you cannot, today the biggest spender is government. If government pulls the string, then everybody pulls the string. Private sector money is not coming in.
Absolutely. So let me ask you this. We're coming to the last, I think, not even 30 seconds left on the show. Top 3 tax expectations from this budget.
So first, there will be a lower startup will be given a definitely below. They may be given some inflation issue, basically. House property income, which is there for the maybe given to make it a little bit more balanced. Actually,
put it in the new regime.
Don't misbalance it. Actually, that's the thing. And the biggest gainer, again, I may tell you, will be the people from 5 to 10 lakhs.
5 to 10 lakhs.
They will be the biggest gainer. Don't expect anything for the other.
And Rahul, to end
should
finally.
do some for middle class also, sir.
We think they'll be the biggest gainers, and hopefully
only
second,
5 to 10 lakhs, na?
second biggest gainer may be the middle.
You can't help it. This is a challenging time for the government.
See. So quickly, Rahul, wealth tip for 2025, irrespective of taxation, irrespective of the markets, one idea for our portfolios to manage and preserve and hopefully grow our money this year.
I think use asset allocation as a principle. I think it will help you in all type of markets. That is one. Constantly, I would say periodically review our portfolios. You can do quarterly, you can do half yearly, and then take out the laggards because they become a big dragger in your whole portfolio. And the third thing is that what I've seen is that the clients and investors in their portfolio have now too many stocks or too many schemes, which makes you difficult to review. And if you are not able to review, again, it will be a dragger to your portfolio.
So streamline.
Streamline. Simple is the best philosophy there.
Okay.
And focus on portfolio rather than just focusing on any single product or single stock returns.
Absolutely. Look at the big picture.
Where the wealth grows.
Absolutely. Look at the big picture when it comes to your wealth. Streamline it and simplify it. I think that's the big message. Thank you very much, gentlemen. This was a helpful conversation. And we're fully revved up and excited and prepped up for the first half of February. Let's see what the finance minister ultimately has in store. Well, with that, it's a wrap on this conversation. Thank you so much for being with us here on Let's Talk Money. And of course, you'll see us here next week. Whatever comes in the budget, we will discuss it threadbare and make it simple for you. To see you again next week.
Let's Talk Money